Executive Director of National Committee for Islamic Economy and Finance, Republic of Indonesia, or KNEKS. His Excellency Mr. Rafiuddin Shikhoh, as CEO and also Managing Director of DinarStandard. Excellencies, the respected editors and also contributors, all participants, ladies and gentlemen, welcome to the book launch event, Impacts of COVID-19 Outbreak on the Islamic Finance in the OIC countries. All right, with me, Citra from Komite Nasional Ekonomi dan Keuangan Syariah KNEKS will lead this event till 3 p.m. inshallah. And first of all, let us praise to Allah Subhanahu wa Ta'ala, the Almighty, because of His mercy and blessing, so that we can gather in this very special occasion, virtually, of course. And also pray salawat and salam may be upon to our last messenger of Allah, Prophet Mohammad sallallahu alaihi wasallam.
Citra? Sorry, there's technical problem aja. Citra? Back. There is technical problem. Citra, are you back?
Yeah.
Okay,
yeah,
okay, please.
So sorry.
Please.
Yeah, there was a technical problem. It's a signal here. Right.
We couldn't.
Is there? Everyone can hear me?
Yeah, now it's clear. Yeah.
All right. And then we will have Dr. Sutan for editor's note before we proceed to the presentation from each country. I will call all countries in the alphabetical order. And then after that, we will open the Q&A session for participants. And before that, hello?
Yes, we can hear you.
We can hear you. Very nice.
Okay.
Keep going, please.
All right. And then at the end of the session, we will have closing remarks from Dr. Mohammad Farooq. And also he will show us how to download the book that we will launch today. And then we have well, ladies and gentlemen, all participants, please, kind reminder for you to mute your microphone during this event, so we can have a smooth event till. Well, without further ado, I will call up Mr. Rahardjo for delivering his opening remarks. For Mr. Rahardjo, the floor is yours.
Thank you, Citra. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. All praises to God Almighty, Allah Subhanahu wa Ta'ala, the one who always showers us with His mercy and blessings, so we can gather in this special occasion, even though spiritually. Peace be upon the Prophet Muhammad SAW, the greatest role model of all time for humankind. Ladies and gentlemen, according to our data, there are around 600,000 total cases of novel coronavirus in OIC countries. As of today, we are facing the inconvenient truth that COVID-19 outbreaks affects all aspects of our life. We cannot deny that financial sector is one of the most affected sectors, and the Islamic financial industry is no exception. It is interesting to see that the regional impacts of coronavirus pandemic on Islamic finance in OIC countries, since OIC is the second largest intergovernmental organization after United Nations. Moreover, the global supply chain disruptions, demand compression, and macroeconomic instability definitely affect OIC member countries as well. This pandemic has put most of the emerging countries' economic conditions in crisis. It is predicted that the global economic growth will only be around 1% in 2020, the lowest since the last global financial crisis. As the economic growth slowing down, the performance of Islamic financial industry will also be likely slowing down. According to some ratings, the financing growth of Islamic banks is forecasted to decrease until below 5% in 2020. This drop consequently will reduce our revenue sharing or margins of the banks, which will also reduce their profits. Ladies and gentlemen, the global financial and economic crisis has highlighted that the Islamic finance industry remains vulnerable to this similar systemic risk as its conventional counterpart. We believe that the economic recovery, especially in Islamic countries, will be hastened by the increasing the exchange of information in the fields of finance, banking, microfinance, and capital market. Sharing experiences from affected countries are very much invaluable for us. Therefore, we think that creating a book as a platform to gather all the information becomes important in addressing how far and fast coronavirus pandemic affects Islamic financial industries in OIC countries. Alhamdulillah, in this blessing month of Ramadan, National Committee for Islamic Economic and Finance, the Republic of Indonesia, or KNEKS, collaborated with DinarStandard and Salam Gateway, have an opportunity to launch the book titled The Impact of COVID-19 Outbreak on Islamic Finance of the OIC countries. We thank all the prominent authors, editors, and all parties who have helped us in finishing this book. We hope that this book can provide diverse perspectives from each country about the opportunities and challenges of Islamic finance, as well as inspiring more OIC member countries in sailing through this uncertain time during the COVID-19 pandemic, while still implementing and upholding ethical economic, finance, and business practices based on Islamic economics and finance principles. Thank you for your attention. Assalamualaikum warahmatullahi wabarakatuh.
Thank you very much for Mr. Ventje. Well, it's actually very exciting to have many participants from all over the world, and we're very excited to know those participants. From which country are you? So please, you can introduce yourself in the chat section in this meeting room, and also mention your country so we can know the participants from which countries in here. Well, moving on to next opening remarks, we will have Mr. Rafiuddin Shikhoh as the CEO of DinarStandard. For Mr. Rafiuddin Shikhoh, the time is yours.
Assalamu alaikum wa rahmatullahi wa barakatuh. To all the dear participants, I start in the name of Allah, the most merciful, the most beneficent, and send our praise and salawat to our beloved Prophet sallallahu alaihi wasallam. Allahumma salli ala Sayyidina Muhammad wa ala alihi wa ashabihi ajmain. I would like to thank KNEKS for inviting us to contribute and be part of this very important initiative and in taking a leadership role in galvanizing a research-based insights from industry scholars around this very important COVID-19 response for the Islamic finance industry. DinarStandard, which is driving a research-based strategy and advisory work across the Islamic economies, is proud to be contributing in a small and humble way in bringing this initial insights and book together for the industry, and look forward to continuing our role in addressing key questions for the industry going forward. I was reflecting earlier about the importance of knowledge and how knowledge and insights is very much integral to the ethos of Islam. And as Allah subhanahu wa ta'ala said, for us to reflect, and in ayah, the translation of which is, in the earth are signs for those who have certainty, and in yourselves can you not see. So as we embark on this path of sharing these research-based insights for the industry, we're proud to be contributing, but we also recognize the importance of keeping Allah subhanahu wa ta'ala and keeping du'as in our belief. For he has said that فَإِنَّ مَعَ الْأُسْرِ يُسْرًا إِنَّ مَعَ الْأُسْرِ يُسْرًا. Indeed, with hardship will be ease. Indeed, with hardship will be ease. So I'd like to share from this esteemed book that is being prepared. I'd like to ask if I can share my screen. If not, I can basically cover a few of the points.
Sure. You can share, sir.
All right. All right. Please let me know when you can see the screen. So if you're able to see the screen, we, at the beginning of the book, have contributed a summary, visual summary of the current state of the impact of Islamic finance on OIC countries, and have summarized that the 12 OIC countries represented in the book represent about 87% of Islamic finance assets, and covering all the geographies across GCC, Southeast Asia, South Asia, Africa, and Central Asia regions. So I'd like to congratulate all the contributors, because your diversity of views and insights really give a very good view, an initial view of how Islamic finance as an industry is responding across OIC countries. As we can see on the top left-hand side, we first looked at the overall impact of COVID-19 on various OIC countries, especially the ones that we have covered in the book. And we look at the GDP projection in terms of the outlook of various OIC countries as adjusted by IMF. So we can see from Turkey and Iran showing this GDP.
You probably played
on the
all kinds of good reasons,
and we can see that Bangladesh and Indonesia, which had as of January,
your favorite live stream,
GDP growth
whatever your
projection,
reason,
which was 7.2
we'll show you how
and
to record
5.1,
any audio and video coming from your
now
computer
adjusted to still
using
be
OBS
the only
Studio,
economy
a
on
free
the
piece of
positive
software
side,
for both PC and Mac.
with a 2 and 0.5%. So that gives us a little bit of a context. And on the right-hand side of that map, you see which countries within OIC, as of May 10th, have the most active cases of coronavirus, which again gives us a view of where the current severity of the crisis is. And so as the readers read your pieces, they have the context that at this time, which countries had the most active cases, and hence the severity of the coronavirus. We also benchmarked global equity indexes, and when we looked at the S&P Global BMI index, compared it during the quarter of Q1 compared to BMI Sharia, we saw that the Sharia index outperformed its conventional benchmark by more than 500 basis points, in fact, making its largest quarterly outperformance since its inception. Then we also looked at the OIC equities impact impact on the equities market. And again, without going into detail, we were able to show that within the, since December of 2019 through April of 2020, what has been the performance of the different OIC equity markets. And that also gives us a good relevant benchmark and relative understanding of how the different markets are reacting, along with the benchmark exchanges. And finally, a sukuk related impact. And you can see a big drop in the returns from the 5 sukuk and bond indexes that we had used to do this analysis, with a slight return in April. And I think we have to also make a note of the volatility in the oil market that has also impacted a lot of the OIC market. So a lot of the cause and effect is also linked to that. So and in conclusion, again, congratulate KNPS and all the authors, and we'd like to thank all the participants. And on behalf of Salam Gateway, which is a Islamic related media platform where the book will be accessible from, and we will make sure we promote it across our communities and the industry, I'd like to also thank for inviting Salam Gateway as well. Thank you. Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you.
Thank you, Mr. Rafiuddin. Well, ladies and gentlemen, now we're moving on to the editor's note. We will have Dr. Sutan Emir Hidayat. Are you ready, sir, to deliver your editor's note?
Inshallah. Can you hear me clearly, Citra?
Yeah, sure. Please, the floor is yours.
Thank you very much. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Alhamdulillah Rabbil Alamin, wassalatu wassalamu ala Rasulillah, amma ba'du, rabbi shrah li sadri wa yassir li amri, wahlul uqdatan min lisani yafqahu qawli. Honorable Mr. Ventje Rahardjo, the Executive Director of KNEKS, Honorable Mr. Rafiuddin Shikhoh, CEO and Managing Director of DinarStandard, my fellow co-editors, Dr. Mohammad, Omar Farooq, and Sister Emir Abdul Alim, respected contributors, authors, and of course, all the participants, ladies and gentlemen. All praises to Allah subhanahu wa ta'ala, the most gracious and merciful, that because of His mercy, we can, alhamdulillah, complete this book titled Impact of the COVID-19 Outbreak on Islamic Finance in the OIC countries. May peace be upon the Holy Prophet Muhammad sallallahu alaihi wasallam, the one who had brought us from the darkness to the lightness. Ladies and gentlemen, as we are aware, most of countries in the world are currently facing the COVID-19 pandemic. This disease has caused the global economy to slow down. Impact of this disease is different from the global financial crisis that happened in 2008, since it attacks the public health system, which results in multi-dimensional implications. In light of the disorientation the entire world is facing in this fast unfolding crisis, to understand and assess the nature and consequences of this crisis are much too premature. Yet, as economists, we have a responsibility to have a head start. That's where this work fits in. While this is another global crisis, although of a different breed, the broader impact on the global economy will be much bigger challenge to deal with. Regardless, This work has a much narrower focus and less ambitious objective. Ladies and gentlemen, in the Muslim world, one out of not too many dynamic agenda and projects involve Islamic finance. Since the launching of the first Islamic full-fledged bank in 1975, Dubai Islamic Bank, the industry has come a long way. It is now a multi-trillion-dollar industry with presence of Islamic financial activities of varying scale in almost all the Muslim majority countries and beyond. It has been registering steady growth in more and more countries, especially those are somewhat latecomers. Islamic financial industry had a silver lining during the 2008 crisis. While it did suffer, as the global economy suffered, it was resilient on the downside, and the negative consequence it suffered was less severe than its conventional counterpart. This book is an early start to try to understand and assess the impact of this 2020 virus-induced crisis on Islamic financial industry. Ladies and gentlemen, a good number of countries, as it has been mentioned by Brother Rafiuddin, around 87% of Islamic financial assets globally, consisting of Muslim majority countries with major and some minor presence of Islamic financial industry are covered in this book. The subject is fresh and exciting enough to elicit interest of a number of academics and scholars on such a short notice to contribute a chapter on countries they have expertise about. We are deeply grateful as the editors of the book on behalf of Dr. Mohammad Omar Farooq and Emir. I am saying this. We are very deeply grateful all contributors for taking on this challenge and making their contribution, mashallah, in less than 3 weeks. This is to show that whenever we want to unite, we can do it. This is to show also how we strengthen our ukhuwah. The countries covered in this book are in alphabetical order: Bahrain, Bangladesh, Brunei Darussalam, Indonesia, Iran, Kuwait, Malaysia, Nigeria, Oman, Pakistan, Saudi Arabia, Turkey, and United Arab Emirates. Represent 87% of the total Islamic financial assets globally. These chapters from those countries show the specific ways they might be impacted and the ways these countries are gearing up to meet the challenges arising out of this crisis. Ladies and gentlemen, to close my editor's note, I hope this book can be a reference to government, practitioners, and other stakeholders in Islamic financial sector, especially in the OIC countries. Finally, again, I would like to express my sincere appreciation and gratitude to all editors, Dr. Muhammad Umar Farooq and Sister Emir Abdul Alim, all contributors, authors, and of course, I would like to thank DinarStandard and Salam Gateway. Without your help and support, this book couldn't be made possible to publish today. And all parties help in making this book possible, and of course, all the attendants, participants who are here with us to see the book launching ceremony. Hopefully, we will reach an end of this pandemic and economic crisis anytime soon. Amin ya Rabbal Alamin. And may Allah Subhanahu wa Ta'ala always protect us wherever and whenever we are. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Sutan Emir Hidayat. Well, ladies and gentlemen, we also have participants outside OIC countries today. we have Professor Kabir Hassan here as the participant from USA, and also we have participants from UAE, besides our speakers from UAE too, and Nigeria as well. We're still waiting for to acknowledge other participants and their location. Well, ladies and gentlemen, this is what we've been waiting for the main agenda, to know the condition or the impacts on Islamic finance of each country of OIC member states. So now we're going to the presentation from each country. I will call the country in alphabetical order, and we still have much time, so I will extend time. It's not only 5 minutes for each speaker, but you can speak for 5 till 8 minutes, and I will maybe remind you if maybe it will take longer. So without further ado, I will call the first speaker from Bahrain. Dr. Mohammad Rizki Primasakti, are you there?
Yes, Assalamualaikum warahmatullahi wabarakatuh, everyone.
Yes, you can start now.
Okay, thank you very much, Ms. Moderator, for your time. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Very good morning, ladies and gentlemen, respected professor, doctors, and all contributors, participants from all around the world. My name is Mohammad Rizki Primasakti. I'm currently serving as assistant professor at University College of Bahrain. I'm very grateful being a part of this book, The Impact of COVID-19 on Islamic Finance Industry in the OIC countries. Thank you very much for KNEKS, DinarStandard, and Salam Gateway. So I have very limited of time, only 5 minutes, as the moderator just now told me. So if you allow me, I would like to share my PowerPoint presentation, please. Okay.
Sure.
Yeah. Right, so can you see on your screen, moderator?
Yeah, I can see it.
Right, good. So our titles for this book project is The Impact of COVID-19 on the Islamic Finance Industry in the Kingdom of Bahrain. So me, Mohammad Rizki, and my co-author, Dr. Rizwan Malik from AOFE, we wrote together these articles. Right, so just to give you this overview about the current condition of the COVID-19 in the Bahrain. This is the latest data that I downloaded yesterday. As of the 21st May 2020, the number of the coronavirus cases, it reached more than 8,000 cases, yeah, with 12 people passed away. And if you look at the number of the recovered cases, it reached almost 4,000. So if we compare the recovered case and divided by the total cases, the recovery rate in Bahrain is almost 50%. So in the regions, the Bahrain is one of that country that has the highest recovery rate. The case has started since the end of the February, when the Bahraini came from the overseas and then spread to Bahrain, Kuwait. And as of now, the numbers still keep increasing. It's far from beyond flattening, but you know, the good news is the number of recovery rate is quite high also in this country. Right, so this chart is showing you the total case recovery all around the world. So I think it is the charts on end of the April or the early May. But now the total case recovery in Bahrain, as you see in the chart, is reached, as I mentioned before, is reached almost 50%. Right. I would like to also to mention that Bahrain is one of the, I think it's the last country that adopting a partial lockdown. It's not a fully lockdown, unlike the other GCC countries, Saudi Arabia, Kuwait, Qatar, and UAE. And since the end of the February 2020, the government has stopped closing the school and university. Until now, we are doing the online virtual teachings 14-day compulsory quarantine for all the Bahrainis and all the citizens, residents who came from abroad need to do the 14 days quarantines, suspending flight, yes, and it all will pretty much affecting the tourism and affecting the economy, suspending a prayer in mosque, restricting gathering to 5 people. In Bahrain, you still can go outside, but it's up to maximum 5 people. If you can go to the park, you go to the beach. If you more than 5 people, you get fined by the authority. Government also rescheduling the major event for Formula One race in April. And I would like to also highlight here the government shoulder that electricity and bills for 3 months, yeah, for 3 months, and wearing face mask is made compulsory in Bahrain. So if the people going outside without a face mask, that authority, the regulator, will fine you amount 5 DD, 5 Bahraini dinar. So it's kind of the policy has been taken by the government thus far about mitigation of the COVID-19 in Bahrain. Just to give you an overview about Bahrain. By the way, Bahrain is a small island. It's in the Arabian Peninsula. It consists of the 4 governorate: a northern governorate, central, southern, and Muharrab. So if you look at the total population in Bahrain is, I think in the 2019 is around 1.7 million people. And if we delve the contribution of economy in Bahrain, just like other GCC country, the oil and gas industry is the most dominant sector contribute to Bahrain economy. So it reaches almost 18%, and followed by the financial services sectors and manufacturing. So if you look at here the composition, manufacturing, financial service, and oil and gas, yes, Bahrain economy is hit hard by the pandemic, and also it will double with the low oil price now. As you know, the oil price is feel the pressures nowadays, even reach a negative for the oil future. So as I mentioned by the manager, Mr. Rafiuddin from the DinarStandard, the almost countries, yeah, in OIC region, it face the negative economic growth due to the impact of the COVID-19. So, although the impact is varying to across the countries, the MENA region, the Middle East and North Africa region, if you see that previously into 2019, the economic growth was 0.6%, and before in October 2019, it forecast 2.6, and now it revised to minus 1.1%. So we will see here almost the country in MENA region have the negative impact, yeah, negative economic growth. And when we look at Bahrain, yes, Bahrain also is expected to grow with that negative 2.5%. So there is a corrections more than 4% changes as compared to the previous forecast. So you can see that all the country in MENA region hit hard by the pandemic, hit hard by the COVID, and also it faced a pressure due to the lower oil price. Yes. But when we see the government initiative, the regulatory initiative about to combating the impact of COVID-19, Bahrain is one of the country in the world that launched the highest percentage of the economic relief package as percentage of GDP. So almost 30% of Bahrain GDP, which is equivalent to 4.3 billions, provided by the governments in response to that pandemic impact on the Bahrain economy. So we see here the size of the COVID-19 economic stimulus packages across the MENA regions and the solutions. Bahrain is almost 30% out of their GDP. Now, what are the government initiatives thus far to combat the COVID-19? Government has allowed the postponement of the loan, the mortgage loan, car loan for 6 months. So yes, there is the installment holiday for the individuals and as well as for the institutions. Paying salary for the private sector for 3 months, yeah, because especially for the SME sector who they face difficulties to get a settle the salary of their staff, exempting the municipality fees, exempting the industrial land rental fees, tourism fees, and for the banking sectors also comprising Islamic banking sector, government provide a liquidity support up to 530 million US dollar. Yeah, Tamkin program, yes, to assist the SME, to assist the small, medium enterprise businesses who get hit hard by the pandemic. And I would also to mention the latest initiative taken by government is the FINA Fair. Yeah, it's kind of the a charity, yeah, raised by the government together with the private sector, with the individual, with all the businesses in Bahrain. And as of the early May, it reached 35 million Bahraini dinar. Yeah, so by the way, it's not only for Muslim, it's for all the nations, yeah, the citizen and resident of Bahrain. The FINA Fair is provided to combat the impact of COVID-19. And because of that business, the traditional business, they cannot cope the business as usual. Now, all the business that goes online. Yeah. So the government, they create a platform, yeah, which we call is a mall.bh. Is a platform for all the commercial store in Bahrain to sell all the product, the stuff like clothes, the food, and so on and so forth. So the business are urged to conduct the business in online. Now, in the new normal, you will see later on that no online business will become the primary, and the traditional way of the business will become the secondary later on after the COVID. Now, I would like to move to the impact on Islamic banking and finance industry in Bahrain. When we see the impact on Islamic stock market, just like other country, the S&P Bahrain Sharia indices is fell about more than 30%, yeah, to close at 171 points. So there is a significant decrease, as you see here, the sale of the volume Islamic S&P Bahrain Sharia Index. The data is taken as of 8 May 2020. So it's also the same thing with the conventional stock market indices, yeah, not only Bahrain, also across GCC regions. Now, when we see the impact on the Islamic banking sector in this country, we believe that in the short term, the government initiative, yeah, the economic stimulus packages, which is almost 30% of that Bahrain GDP, will, yes, we might have an impact to shoulder the perhaps the short-term measure for the Islamic banking, for example, to shoulder liquidity support for the bank. But we projected if these cases will be prolonged for medium term or long term, it will be impact across several sectors. Yeah. For example, in the profitability levels. Yeah. The credit rating agencies, just the S&P Global Rating, they have forecast that Islamic banking sector will drop in 2020. Yeah. Bahrain, although the CBB, the Central Banking of Bahrain, had cutting the lending rate from 4% to 1.5%, but it would potentially cause that liquidity shrink, and margins are likely to come under pressure if that cases COVID-19 will prolong. And yes, it might also impact the fee-based income, yeah, because the pandemic will weaken the customer spending in their retail business, investor holding cash due to economic instability, and it could put pressure on fee-based services over by Islamic banks, such as the fee or commissions provided by bank transfer services, commission for issuing Islamic credit card, self-custody services. And for capital adequacy, yeah, this is what we predict might be impact also the Islamic banking sector, because for this 3-month period, the individual customer and the institutional customer, we get the loan holiday, right? But we can't forecast after 3 months. We don't know. So the bank need to reassess the customer profile, whether they are still good enough to pay their the credit or not. So if you look at the data, the asset quality ratio for Islamic retail bank in Bahrain, data from 2019 had deteriorated because the NPF ratio increased from 9% to 10.4% in 2019. And for Islamic banking and finance, there is a greater probability that the deferment of the loan payment will have a positive impact on the asset quality on the Islamic bank. In the short run, if it will still again the default of the business, SME business in the Bahrain. So the pressure on asset quality could be exacerbated, could be worsened if the Islamic bank have the higher impairment on the various sectors. For your information, the data from the CBB, most of the financing channel to the transportation sector, construction sector, and trade sector. So if the Islamic banking sector, they have an exposure on those sectors, in the long run, it might have the greater chance to worsen the asset quality of the Islamic banking.
Excuse me,
And
doctor.
yes,
Yeah, you can make it faster.
All right.
Our time is limited. Thank you.
All right. So just 2 points about one, liquidity. Islamic banking also face a problem with liquidity, as mentioned before, because of the ability of the customer to pay their obligation after these 3 months, and it will be hampering also the the Islamic banking in Bahrain, because they depend on the non-domestic funding. Yeah, it around 26% of total funding and 38% of their deposits. Now, I come to conclusion. Yeah, so the COVID-19 pandemic is still unfolding. It is expected the war after the COVID will be a different war. And in Islamic bank in the country, they can jointly set up a wakaf fund to support the family or the business affected by the coronavirus. For example, for those who family were deceased, who have died by the virus, support the family and paying their salary. And also the expatriate in Bahrain, it can be support using this fund. And yes, this wakaf fund can also be utilized to boost the healthcare services. For example, providing the hospital beds, ventilators, and medical staff. And for SME, the support SME with the relaxing working capital, because the SME, one of the sector that hit hard by the pandemic. And lastly, it is expected that the default rate of the underlying company will be go up, and it is important for Islamic banking and financial institutions to work with their client to assess their asset and liability side in order to ensure the optimal solutions to ensure the NPF and investor expectation are managed as well. With that, I stop here. Thank you very much. Assalamualaikum.
Waalaikumsalam. Thank you, Dr. Mohammad Rizki. Well, let me remind you, the authors, please, you have only 5 to 7 minutes. Please go directly to the economic impacts and also specifically in Islamic finance. And all the details, it can be read in the book. Okay. So now moving on to Bangladesh, Dr. Mohammad Dulamia.
Thank you very much. Can I share my slides, please?
Sure.
Okay, but do you see these slides or?
Not yet.
Is it going?
Not yet, sir.
Is it visible, the PowerPoints?
It's possible, but it's not seen here. Maybe because due to the limited time, you can present anything about the impact on Islamic finance in Bangladesh with the presentation, Doctor?
Oh, okay.
It's not seen yet.
There is some problem. I cannot share.
Here
yes, sir.
Ready? I also see participants from Japan and Bangladesh, Malaysia. Thank you for joining us.
Is it visible?
Not yet, sir.
It's coming.
Maybe
okay, so I start. As you know, and it is well known to everybody that the COVID-19 is going to having a lot of impacts on every economy, but regardless of Islamic countries or non-Islamic countries. So Bangladesh is not an exception also. So COVID-19 is going to affect Bangladesh seriously, and also its all industries. particularly, but financial sector is in vulnerable because of the fragility, and there is a lot of other things. So. I'm instead of going to the background of the COVID-19 and the situation in Bangladesh. Bangladesh is the late starter in COVID-19, but I'm going directly to the topic that how actually the Islamic financial industry are going to be hit by the COVID-19. Just a background that how the financial industry, Islamic financial industries in Bangladesh is composed of. There are total 11 full-fledged Islamic banks and 19 Islamic banking branches of 9 conventional banks and 88 Islamic banking windows of 8 conventional banks. And there are some other non-banking financial institutions which are actually having very small percentage of the total financial assets. But I can say the Islamic banking industry in Bangladesh is having almost a good percentage of the total banking sector asset. It's around 25%. So it's quite a remarkable progress of Islamic banking industry in Bangladesh. And it's a good a good amount of assets compared to also the global Islamic financial systems. So what are the, actually these are all our predictions based on our good guess, because nobody knows actually when the pandemic is going to be over. And unless and until the pandemic is over, actually no industry is actually immune from the severity of the coronavirus. So, but we have applied our best guess, our available data and everything, then we can actually see what actually we can see the impact of COVID-19. If you see this the stock market, the first to give you a note that Bangladesh didn't start the COVID-19 well prepared, because before the COVID-19 hit the country, last year the Bangladesh financial industry was going to going through some kind of difficulties, and based on this the government took some initiatives. So the market was going to recover, but when the market was going to recover, at that time the COVID-19 hit the country again, actually turning the trend of recovery again down. If you see the stock market, I have noted here 2 indices. One is the Dhaka Stock Exchange General Index on the left axis and the Sharia Index on the right axis, and you can see there is a very high correlation between these two. All are dropping. If you see this, the fluctuations in December 2019, it was going to be recovered, and then suddenly the COVID hit in February of 2020, and again the market crashed, and until in March 18 the data is available. After that the market is closed. So you can see it is severely hitting the stock market. And about the insurance companies, I have picked here the market reactions of the insurance companies. There are currently 6 insurance companies listed on the Dhaka Stock Exchange, and if you can see from February onwards, all the prices of all the insurance companies are going down. So it shows a negative impact of the COVID as we expected. And now analyzing the banking industry, how they are going to be hit by the COVID, you see the major share of the banking industries are working capital for industry and trade and commerce. The 2 components account for around 2/3 of the total banking industry of the country. And you know this working capital are going to for industry and trade and commerce, and especially the the apparels industry, ready-made garments industry in Bangladesh are having a lot of contributions to the country's GDP. And due to the pandemic, lots of buy order from the Western countries have been cancelled, and that's actually put the total ready-made garments industry in trouble. And because the banking are heavily financing the garments industry, so this sector is going to be hit severely, and especially for the working capital of the industry. Most of the industries are now in lockdown, and they cannot do their operations. So there is a possibility that these industries cannot pay their installments and the interest and principals of the bank in time. So bank are actually is going to be having a serious trouble from these two sides. And how actually we can think of weathering the storm? Well, actually, it is very difficult, of course, because the pandemic is very uncertain. But we can have some precautions. So we have to do something to actually protect ourselves. The bank can actually. This is the good time for a bank to initiate the fintech. The time has never been so favorable for bank to test how strong they are in terms of implementing their fintech. So they have to implement their fintech and they have to continue their operations whatever way possible. And try to keep the flow of operations as much as possible. This is the first. And in terms of regulatory buffer, actually Bangladesh banking system, as I told you earlier, due to the earlier problem, the government has taken some initiatives, and that's why bank has accumulated some kind of capital buffer with them. They have some liquidity buffer, so they can utilize this liquidity buffer for this tough time, and they can just try to mitigate the risk as much as possible. And of course, without the government help, actually bank cannot survive by themselves. So bank has to depend on the government. Government fiscal policy is very important, and government has already taken various measures, actually injecting liquid finance to the bank and to the industry. So government is trying to keep the natural activities of the economy running. This is very important. And last point is actually the government has to seek the international assistance, especially from the Asian Development Bank, Islamic Development Bank, and IMF, because as an emerging economy and developing countries, Bangladesh government has limited financial capacity. They can actually seek resources from these international organizations. So actually, lastly, this is the conclusions. While Bangladesh banking industry, especially Islamic financial industries, like other industries, are going to be hit hard by the COVID-19. But of course, we are not pessimistic. We are optimistic because the banking system has kind of a liquidity buffer, and government is taking some initiative. And with the hope that the pandemic will be over soon, we hope that the banking industry, financial banking industry of Bangladesh has the capacity to absorb the risk of medium term, short to medium term. Thank you.
Thank you, Dr. Mohammad. Ladies and gentlemen, later on after this session, we will have Q&A session, so you can drop your questions in the chat section here, and we'll select the selected questions to be asked to the speakers. Well, without further ado, we proceed to the next country. From Brunei Darussalam, I'm calling upon Dr. Abdurrahman Raden Aji. Are you ready?
Yes, I am okay. I am here.
Just direct to the highlights of the impacts in Brunei Darussalam, sir.
Inshallah.
Thank you.
Thank you very much. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Alhamdulillah, wassalatu wassalam ala rasulillah wa ala alihi wa sahbihi wa man wala, amma ba'd. Okay, in this presentation, I do not prepare the slides because I want you to be familiar with my face. Because now, as you know, that the Prophet sallallahu alaihi wasallam said, "Ibtisamuka li akhika sadaqah." So your face, if your smile face will be sadaqah for your brother. Okay, so I only discussed that. Inshallah, in 5 minutes, I will finish the presentation. The presentation, the paper which I prepare here, it is the collaboration with Sister Nadia from Indonesia regarding the Brunei Darussalam. In Brunei Darussalam, first of all, we want to say here about the COVID-19, because nowadays talking about COVID-19. If in the World Cup, every day they discuss about the World Cup. But nowadays we discuss about the COVID. In COVID-19, the last report yesterday from the government of Brunei Darussalam that no positive case yesterday. Total number of positive cases remain at 141. Only 141. And also yesterday, no recovered case. Hence, total number of recovered case remain at 136. For active positive case still yesterday is treated at National Isolation Center. All contacts of 2,679 have completed their quarantine period. It is as the summary of what happened in Brunei Darussalam regarding the COVID-19. So you look to what we said in Brunei Darussalam, that the government continue to settle and to control this COVID-19. Then we move to what is the financial package for all the countries regarding COVID-19 here. So we have three state-led measures in facing this COVID-19. It is for in financial sector. So the first state-led measure is the deferment on principal repayment. It is the same like our brother from Bahrain. And the second state-led measure is centered on tax, utility, and social security deduction, and deferments on deferments of the repayment is done. And the third state-led measure is the addition economic relief. So the third is there is the addition economic relief amounting to $250 million dollar Brunei. So these are the measures, the three that measure. But now we want to know about how Islamic financial sector. Where is the position of Islamic financial sector? Although there is no any specific in what is that in measuring the Islamic financial system, but Islamic financial system here are included in the national as whole national package, as I mentioned in the previous statement. So in Islamic finance sector, the focus on Islamic financial sector here, it is like other. Only the focus here on deferment repayment. On deferment payment. Therefore, for example, as Bahrain, they have 6 months. I think it is maybe standard, international standard. They make the deferment period is 6 months. Brunei also make the deferment here 6 months. All this is in deferment of four measure here. The deferment on repayment for financing for all business sectors. All business sector. Then second, restructuring and deferment of repayment for personal financing and high purchase facilities. This is the second. And the third, delaying repayment of property or real estate financing for business and working individual. And lastly, it is about restructuring outstanding credit card debt into financing not longer than 3 years for private sector employees and the self-employed. So this is the measure. This is what the government of Brunei Darussalam made Islamic financial sector. This why? Because all this one, as Brunei believe in Allah Subhanahu Wa Taala, and Allah Subhanahu Wa Taala said, "Wa in kana dzu usratin fanadiratun ila maisarah." So if there is a hardship in any person, in anybody, so what you should do? It is you make it, let there be postponement until time of ease, until time of ease. We make this one not only for our mundane life, but also for our hereafter life. Yes, as the ibadah. It is only, I said, 5 minutes, inshallah. Thank you very much.
Thank you very much, Dr. Abdul Rahman. Very short and very informative about Brunei Darussalam. Well, directly go to Indonesia now. Prof. Raditya, are you ready? The time is yours, Prof. Prof. Raditya, can you hear me?
Sorry, I just moved the. Can you hear me now?
Sure.
Okay, I just share screen. I don't know whether you can see my slide or not. But let me start. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Thank you very much. Asyhadu la ilaha illallah wahdahu la syarika lahu wa asyhadu anna Muhammadan abduhu wa rasuluhu la nabiyya ba'da. Praise be to God Almighty, Allah Subhanahu wa Ta'ala. Peace be upon Prophet Sallallahu Alaihi Wasallam. With regard to the COVID-19 on the case of Indonesia, this paper is written by me, Raditya Sukmana, and my co-author, Imam Wahyudi Indrawan and Sahrul Rohmatul Ajija. I think Indonesia, similar with other country previously, that also Indonesia got affected by the COVID-19. If you look at the composite index, index harga saham common is stock market index. You see that in the end of March is going down. April is the lowest one. In the context of population, Indonesia is having the fourth largest populations after US. US is around 450 million, and Indonesia is 270 million populations. And currently, 1,000 plus already passed away because of this COVID-19, and also recently we could not yet flattening the curve, and in fact the trend is increasing on the new cases. And also the impact on the exchange rate, we depreciate in the end of January is 13,000, and the early April 16,500. And for the first quarter economic growth, normally Indonesian economic growth is 5%, around 5%. But the economic growth on the first quarter down to 2 to 3%. Jakarta Islamic Index JII 650 early February 2020 to below 400 end of March. So what then the government do? Government issue the policy for the stimulus package, and it amount to 25.8 billion USD, and 27% out of it is for social security program, because many people could not get to work, could not earn money, and government directly give the basic needs like food and so on. And also for the healthcare, government allocate 18% out of 25 billion. It'll be used for health facility, for the medical doctor, for the personal protective equipment, to face masks. But the challenging is how to distribute, because Indonesia is wide, from Aceh to Papua is almost 8 hours. How to distribute? And also we are not yet ready for the sudden large number of patients, so that some of the hotels is used for the COVID patients. And also 37% out of the stimulus package is used for economic recovery. This is used for the many business who borrow money from the bank. Their business closed down because of the partial lockdown in Indonesia. The government not apply partial lockdown, not the full lockdown. So people are still moving. So because of the business closed down, they could not get the income. So the Central Bank of Indonesia create Financial Service Authority create the restructuring program for this pandemic. Also, the 17% out of the stimulus package is used for tax incentive. This is for local government revenue. So because of the partial lockdown, then many of the restaurants, many of the hotels are not operating. So the local government could not earn local tax. For that, the government give the incentive. So how is the role of the Islamic social finance? Here in Indonesia, zakat institutions is private and also a government. So private zakat institution is very active in helping people who got affected for this COVID-19, especially in the health sector, the patients, and also the economic sector. For those who micro enterprise who could not get income because they have to stay at home. If you see the potential, zakat potential is 14 billion. This is study by Institute Pertanian Bogor. 14 billion is almost half of the stimulus package. So if we can materialize this zakat potentials, is very significant in helping the government, especially for this COVID. And zakat institution currently support for the health sector in the form of getting a face mask and also the other health facility. And also for the economic sector, many zakat institutions directly give the basic needs for those who got affected. For the Islamic microfinance also, they got affected also, and they restructuring the micro enterprise got the restructuring program from the Islamic bank. The fishermen who could not sell their fish to the restaurant because the restaurant is closed, so they could not earn income. But alhamdulillah, they borrow money from the Islamic microfinance, and microfinance can create the restructure for those fishermen. Agriculture is still doing fine, and also the private wakaf institution now they announce for the wakaf ventilator. This is because the number of ventilator in the hospital is very limited. So one of the schools, ITB, Institut Teknologi Bandung, they create a ventilator, cheap ventilator. So this private wakaf institution raise fund for to buy those wakaf ventilator. And I think the wisdom of this COVID is that we are more aware about our own health. We use mask every day. We use we wash our hand regularly. And also the wisdom is that we can have a close relationship with our family members, more quality time with family. Also, this COVID create awareness to IT. We can have a meeting effective few times a day, and also but still Indonesia still facing challenges because now the trend, as I said earlier, the trend is still increasing. Even yesterday the largest number, so the trend is still increasing. We are not yet reached to the flattening curve. And also recently, because of the close to Eid, then the culture in Indonesia that they want to go back to see their parents in other places. So they move here and there, and it opens the possibility for the coronavirus to be spread to other persons. And this is our challenge. The government still apply not a complete lockdown, partial lockdown. I understand, because I think this is because Indonesia is large, 270 million populations. So people are still moving. So I think that's all my presentation. Thank you very much. Assalamualaikum warahmatullahi wabarakatuh. Back to you.
Thank you, Professor Aditya. Well,
But
we proceed to Iran. Dr. Hojat, are you there? Well, ladies and gentlemen, here in this event we have special guests. Actually, it is Prof. Kabir Hassan, the IDB Nobel Prize winner in 2016. Professor Kabir Hassan, it's with me, Chitra from KNKS. Can you hear me, Professor? Oh, maybe we can talk with Professor Kabir Hassan later on. Professor?
Can you hear me?
Oh, sure. Yeah, I can hear you. Professor, before we continue our presentation from other countries, maybe you can deliver short.
Okay. Assalamualaikum warahmatullahi wabarakatuh. I see a lot of familiar faces, my friends and colleagues. Thank you. It's almost 2 o'clock in New Orleans time. So basically, the corona has really changed our thinking. Thought process is going to not end very soon. So there are 3 or 4 points I want to mention. First of all, from the divine side, so that is a indication from Allah subhanahu wa ta'ala that we are doing something wrong. So we really have to look at our inside as an individual level, at the societal level, at the international level. A lot of bad things that is happening, we're committing, so we have to seek forgiveness from God. Coming to this, how to deal with these things. So many economists say that this COVID is a exogenous shock, or call this supply shock to the economy. So supply shock, usually after a while it goes away, but this COVID has a very interesting characteristics in the sense that we are attacked by a virus which is very unknown. It really is more virulent and more contagious, and it can mutate very faster than the known viruses that exist. So if you compare this situation with previous financial crises that happened in Asia, that started in Thailand, then we have 2008 and 9 that started the real estate finance from the banking sector. But those are endogenous shock to the economy, and still we are suffering from that one. Exogenous shock, usually we can tackle with it very easily, but since we do not know a remedy for this thing, so every government, regardless, is coming up with 3 prescriptions. First, flattening the curve. So you try to do social distancing and all the health measures because it's a health risk, so that it does not overburden the healthcare system of a country. You try to reduce the number of deaths by reducing the number of contagion. But by doing this, we are also having a problem with, we are also flattening the economy. So we are facing into severe economic crisis, as all the numbers for 2 or 3 countries that has been shown. The projection is that many countries will have a negative economic growth and developing countries will suffer the most. So now the question is what the prescription the government is doing right now. First of all, the social distancing the government is doing, the flattening the curve. It is coming up with a lot of social stimulus package. In the United States, the government is $2.2 trillion is giving incentive money to the people in different formats. So the cash infusion they are doing so that they can keep alive this population. You have to understand that the 80% of the population are affected directly because they cannot go to a job because of this lockdown and social distancing. So you have to keep them alive for the time being. And finally, you have to come up with a package. That package is going to help when the economy becomes restarted. So all these things have to be done in a very coordinated way. Having said this, now the question is where the money will come from. The economy is depressed, government tax revenue is lower, budget deficit. So many people say they're now helicopter money. So the whole idea of who owns the money. So the government is the monopoly of money. If the money is created to help and channel this to directly the poor and the lower middle class and the people they really need money, that probably will create a demand stimulus. So even though it's a supply side problem, it has also a demand side implication. So supply demand is continuously working together. Now, having said this, coming back to the Islamic finance industry, we talk about all the beautiful things. Islamic finance is great, value addition. So this will be a real test for the Islamic finance industry. How value additive we are in, like, if somebody cannot pay you debt, extend time. So those kind of measures we want to see whether the Islamic banks are following. But many cases, even the Islamic banking industry is the majority, about 80% of the whole Islamic finance, but that has taken the, sitting, the driver's seat. Now we cannot really expect them to do everything because they are the structure, the model they have taken, and they're regulated by the government and so on. So they have very little can do, but few things they can do, extend the time to the borrower. They use their, social fund, this, the doubtful income that they can use in order to take care of the people they have organizationally, as well as the people they are servicing within the industry, within the locality. But most importantly, we really need to look at the social finance aspect of it. We really cannot get out of these things without using the institution of Islamic social finance, zakat, sadaqah, waqaf. So it's the month of Ramadan, so we really need to give more than sadaqah in order to help our brothers and sisters. Now, the banking industry will be affected like any other conventional banking industry. So the government probably will come up with some sort of relief package. But I have a double take on these things. The relief package, actually the banking industry doesn't have the poor people in any country, whether the Islamic banks or conventional banks. These are the banks for the corporate sector. I mean, if you look at their composition or asset balance sheet and model, you'll find very little help these banks do to the poor people. So we have to really come with microfinance or the Islamic social finance aspect of it. We have to move it up. So I would not really, when it comes to repackaging, give the, recapitalization, give money to the big banks. We should really give money to the social sector. If the government, the helicopter money that I'm talking about, that goes directly to the poor people, because you have to keep them alive. Otherwise, the SME, you talk about 80% of any industry, any country, these SMEs are poor people, low to middle income people. We really need to channel our funds from the government side to these people rather than recapitalizing all the big banks. Yes, you have to do it to a certain degree. Even in the United States, all the big money, about $2 trillion, 25% is going to the big businesses. So how is it helping the poor people? And now is the time, the last sentence, the Islamic finance is a value additive finance. We say that it's different from the conventional finance. It's a test case for us to show that it's really, and this is the social finance or the value addition finance that we talk about. And inshallah, the government will look into these things, the social side of it, looking at the poor people rather than big businesses and so on. They have the lobbying power, poor people don't. So the political process has to work out. There has to be civil society pressure that the money goes to the right people. That means the poor, small and medium sized enterprises and so on. And Islamic finance is somewhere connected with this thing. And now, since the profit loss sharing, their true nature will come out and see how they are going to cope with this thing. Thank you very much.
Thank you very much, Professor Kabir Hassan, for sharing your thoughts directly from USA. Well, we can continue to the next country. Ira, for Dr. Hujat, are you still there? Well, I think maybe there is a technical matters in Dr. Hujat. We can proceed to the next country, Malaysia. Calling upon Madam Yosita Nurdayanti, are you there?
Yes, I'm there. Right. I'm here.
Madam, you can start a short presentation, just direct to the highlights or don't go in details. Thank you.
Can I share some slides?
Sure.
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. I will share about the economic cost of the COVID-19 outbreak for Malaysia. This paper is written by Prof. Ahmad Kamil and me. I'm as a co-writer. So Prof. Kamil couldn't come to the event, so he asked me to present on behalf of him. Okay. COVID-19 cases as per 3rd May 2020 in Malaysia. Total infected about 6,000 people, recovered 4,000 people, and died 105 people. The Malaysia already flattened the curve. I already updated the data as per 19 May 2020. Confirmed cases still in 6,900 people. Recovery rate increased. Previously in 3rd May, 70% recovery rate. In 19 May, recovery rate increased to 80.9%. And the death rate also decreased. In 3rd May is 1.67%. In 19 May, the death rate is 1.63%. BNM projected that Malaysia's economic growth is between -2% and 0.5% in 2020. This growth to be weighed by output loss from COVID-19, movement control, since the Malaysia already announced movement control order since 18 March 2020. where public gathering is prohibited, closure of school and universities, closure of all government and private premises except those involved in essential services. Next. Malaysia's economy will not be spared, affected by both weak global demand and domestic containment measures. Export of goods and services will drop very significant because weak global demand, supply chain disruption, and lower foreign tourists received because Malaysia didn't allow foreign tourists to come during the MCO. Private investment also declined, private consumption declined, affected by lower income and containment measure, but supported by policy measures. Then next to effects on Islamic banking and finance. As Prof. Kabir Hassan mentioned, this is the shift in aggregate demand and aggregate supply. So liquidity in the country would shrink first. This will bring about loan defaults by business and individuals, causing further liquidity and credit crunch because business is closed, the individuals unemployed or underemployed, and banks will, with NPLs, will cut lending. The economy shrink further by a multiplier effect. Bankruptcies and foreclosure will rise, and banking failures and mergers are likely to ensue. Then as for the growth of Islamic banking and finance per se in Malaysia, Fitch Ratings expected that Islamic financing to still grow faster than its conventional counterpart, but maybe it wouldn't meet the BNM's market share target, 40,000 for 2020. The bank's priority is to ensure that the financial system continues to serve the needs of the economy. They do some relief for individuals, SMEs, and corporates. Similar with Brunei and Bangladesh, they gave 6-month deferment on loans or financing for individuals and SMEs, conversion of credit card balance, facilitate corporate requests to defer, lower financing costs, and other facilities. Okay. The Malaysia.
Yosita, you need to unmute.
Madam Yosita?
Okay, wait, sorry. The government tried to rejuvenate the economy. They inject liquidity back to the economy by came up with Prihatin economic stimulus package. There are 3 goals for Prihatin: to protect the people, support the business, and strengthening the economy. In total, the BNM project, the stimulus measures are estimated to add 2.8%. Okay, next. The main highlights of the Prihatin package, the size is 250 billion ringgit. It consists of Bantuan Prihatin Nasional around 10 billion ringgit, wage subsidy program 6 billion ringgit, additional funds for SMEs, loan moratorium, assistance to students, to curb the COVID-19, withdrawal from ABF account, and Dana Jamin corporate guarantee, small projects, and electricity bills discount. Then opportunity time for Islamic finance. As Prof. Kabir Hassan mentioned before, the COVID-19 crisis provides an opportune time for Islamic finance to shift from credit-based financing to an equity-based. And this is a time for collaboration, commercial finance with Islamic social finance, wakaf, sadaqah, and microfinance. And in particular, the use of mobile banking and any other online banking also will increase. Okay, that's all from me. I give back to Ms. Chitra.
Right. Thank you, Madam Yosita. Well, we still have 6 countries to go. Let me remind you, the authors, please be specific. Directly go to the main highlights or main points. And for the participants, you can start dropping your questions in the chat section. We will select 2 or 3 questions for a Q&A session afterwards. Well, next for Nigeria, calling upon Dr. Aliyu. Are you there? Dr. Aliyu? Well, maybe we will get back to Dr. Aliyu later if he's not here now. So for Oman, Dr. Mohammad Iman Sastra.
Assalamualaikum. Assalamualaikum. I'm there. Assalamualaikum.
Who is this?
Assalamualaikum, sister.
Oh, Dr. Alius, you're here. Please, doctor. 5 minutes time speaking.
Assalamualaikum. Can you hear me? Can you hear me?
I can hear you.
Can you hear me?
Yes, I can hear you, doctor.
Okay, thank you.
Yeah, please talk in this presentation, sir.
Assalamualaikum. Thank you very much for the opportunity. All right. First of all, let me thank the organizers for this opportunity. On behalf of two of us, myself and Professor Amina, on our paper on the impact of COVID-19 on Islamic finance in Nigeria. Okay, Nigeria. Can you hear me? Hello?
Yeah, we can.
Hello? Hello, can you hear me?
Yes, it's clear. And if you don't mind, can you turn on your video? Your video, please.
Hello?
Hello?
We can hear you.
Hello?
Yeah, Dr. Aliyu, it's clear. Can you please turn on your video? Doctor?
Selamat. Can you hear me? Assalamualaikum.
Hello? Doctor? Okay, Dr. Aliyu, if you can hear me.
Can you hear me? Hello?
Yeah, it's clear. Doctor, I'm sorry if it's still a technical problem there. I will go to the next country and I will get back to you later on. Please give me a chance to Oman. Dr. Muhammad Iman Sastra, are you there?
Yes.
Yeah,
yes. Assalamualaikum warahmatullahi wabarakatuh.
Yeah, thank you. Waalaikumsalam.
All right. Okay. Thank you very much for the KNEKS for organizing this kind of an excellent event. Here I'm representing Oman as the one of the OIC members country in the GCC.
Is there any challenge? Can you hear me?
Yes, we can hear you well, Dr. Aliyu, but maybe because of the we have to shift you to the next presentation after Oman.
Okay. So in Oman itself, as per the paper that I have written, the Oman is one of the slowest spreading COVID-19 in the GCC, as well as the lowest death percentage up to even up till today. It's below 2%. Even I write this paper, our case is only one in a death, which happen only to one citizen that's age of 70 years old. But our focus now is we will discuss about the total growth of Islamic finance industry in Oman, as well as the impact the COVID-19 to this Islamic finance sector. So as you know, after having this kind of outbreak, Central Bank of Oman, they are issuing the stimulus package equivalent to 20 billion US dollar or Omani real or 8 billions. So this stimulus package will be used as a liquidity proposals for the financial industries in Oman, as well as to cover the economics suffer from several sectors that either directly or indirectly got affected from this the outbreak. Right? As you know, Oman is one of the led country that introduced Islamic finance, which is started in 2013 by the operation of Islamic Bank. Through the issuance of Regular Key number 69 2012 in December 2012. after the operation of Islamic banking industry, the takaful operation Islamic capital market start to follow. Actually, the Central Bank of Oman itself, they are planning to have, market share of 10% in 2022. But the good news is that Oman has reached a market share of 10% less than 2022, which we have a market share of 10% in 2016, right? Because I've not shared the slides here because it will take time. So in 2016, Islamic banking industry has been able to record the projected growth, which is beyond the Central Bank of Oman's projections. While in the end of 2020, at the beginning of 2020, the market share of Islamic banking in Oman has reached to 14%, which is this is one of the highest growth, even as Standard & Poor's stated that Oman is the one of the fastest growth of Islamic banking industry in the GCC, right? Other than Islamic banking industry, Oman also has recorded the double-digit growth for takaful industry, where in 2018 it recorded 17% of growth, which is the highest one in the Middle East. And in 2019, we are recorded 20% of the growth, national growth of takaful industry, which representing of 13.2%, which is increased 12% from the last year. So this is one of the tremendous record for the hour in Islamic finance growth. But other than the Islamic banking and takaful, unfortunately, the Islamic capital market not follow the double-digit growth for the Islamic finance industry. For Islamic capital market, we are having even a decrease in terms of growth by some kind of percentage equal to something 10.37%. But the growth, the market share of Islamic capital market, it is mostly coming from the takaful issuance, which the total of Islamic capital market out of the capital market in general is equal to 10.3%. All right. So as you know, the Oman is the same like other GCC countries, where we are mostly relying or depending on the oil prices. Whenever oil prices decrease, the impact of Islamic finance industry also, the growth of Islamic finance industry also will decrease. So as you know, during the COVID-19 outbreak, the prices of the oil will fall down into the lowest level since 2008, right? Even we can see the price of the oil has been reached to below than $20 per barrel. So that's why this also will affect the future of Islamic finance growth during the COVID outbreak. During this COVID outbreak also, we are facing a lot of issue in the Islamic banking, including there are a lot of proposal of rescheduling and restructuring of the financing activities, especially the sector that got impact directly from this COVID-19 outbreak. That's why the CBO has been issued this one circular whereby the Islamic finance industry shall support the economic of the Sultanate, whereby we have to give 3 to 6 months of the free installment without giving any additional charges. So as I think I'm only representing the industry here. So in Oman, we already provided up to 6 months moratorium without paying any installment, without paying any charges. We have already got many proposals from our retail customers as well as our corporate customers. Even the Central Sharia Board itself in support the Islamic banks to provide a free installment during this 3 to 6 months. It depends on the sector to the sector. If the sector is like, for example, which is affected fully by this outbreak, normally banks give 6 months without any installment. Or maybe sometimes we are getting customer who wants to still continue the installment because they are not really affected and they are also still a good capital buffer in their financial cash, for example. So now we are we will be providing full support to the industry, especially the SMEs that are fully affected from this outbreak. As we know, the SME is one of the sector that much suffer in this kind of the outbreak. We can see, like, for example, the sector of what is the food security, which not actually well demanded in Oman, for example. So that's why the food security also got affected, or maybe because of the lockdown issues, they cannot going to work. We also given a support to the employee that their salary decreased by 20 to 40, or some employees they are got the decreased salary by 50%. So in this case, we are providing rescheduling to this kind of customers by decreasing the installment to up to 50% or 60%. So at the end on my presentation, the suggestions from in this case, I already provided suggestion to all Islamic financial entities, whereby you because there are a lot of several funds which is available in the Islamic bank's account, as well as Islamic financial companies account, such as, for example, CSR. They have to provide the full support from the CSR fund to the the economics in order to still survive. They also to provide the food to the affected peoples. They also have to not those companies who are not still distribute their full full profit last year. They have to hold some kind of the profit in order to help this outbreak, including many Islamic banks. We are helping a lot by providing financial aid to the Ministry of Health, for example, to the Ministry of Education, and too many people are affected direct or indirectly to this kind of the outbreak. And lastly, I think this is the time for the Islamic financial institution to revise their budget and to strengthen their step in order to see the new normal. Because, for example, in the before the outbreak, we are focusing on corporate and SMB or this kind of sector. But now we have to focus on also from the food security and agriculture sector and health, which before Islamic financial entities not care much in the health sector. And at the end, I will close my presentation. The Islamic Bank shall take this kind of opportunity to give a more advanced digital platform, payment in order to ease their customer to so that they are not really need to attend to visit the branch in order to make the transaction. Now, full all kind of the transaction can be done by digital. Thank you very much. This is all from Oman. Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Dr. Muhammad Iman. For Dr. Aliyu, you can hear me, sir? From Nigeria. If still cannot, let me proceed to the next country first.
Please unmute your microphone and video, Dr. Aliyu.
Can you hear me?
Yeah, now I can hear. Dr.
Assalamualaikum.
Walaikum salam.
Can I go ahead? Can I continue?
Okay, sure, please. 5 minutes presentation, sir.
All right, thank you.
To the main points, please. Thank you.
Convenience. First of all, Nigeria is the largest economy in West Africa with a GDP of 100 USD as in 2019, and the largest population was about 200 million people, of which 55% are Muslim. That's a member of OIC country. The pre-COVID-19 financial sector was relatively stable, and we got the first record of first case in 27 February 2020, whereby an Italian man coming to Nigeria for a work come with the virus. So since then, the government started taking measures such as partial lockdown, and in some cases, complete lockdown in some areas where it is heavily affected, such as in Lagos, which is currently the epicenter of the disease. So when I submitted the chapter together with the Professor Amina,
Keep going on. Dr. Aliu. Dr. Aliu. Hello?
Hello.
Dr. Aliu?
Hello.
Yeah, keep going on, sir.
I guess not Dr. Aliu. Maybe we can proceed with the next.
Okay. Hopefully Dr. Aliu will get better signal there. Now we proceed to Pakistan. Dr. Salman Ahmed, please take your time to speak, sir. 5 minutes speaking time. Thank you. Dr. Salman Ahmed, you're still here? Right, due to limited time, I will proceed to the next country. We will go back when they are here.
Yeah, I saw Dr. Salman is speaking now. Yeah, please, Dr. Salman.
Yes, can you hear me now?
Yeah,
Yes,
yeah. Now I
very
can
clear.
hear you.
Yes.
Dr. Salman, please. Yeah.
All right. I'm representing Pakistan, and I was very happy to contribute a chapter in this esteemed book. So I would focus on 4 points in my presentation. First of all, I would
turn
give.
on your video?
Yes. Can you see my video now? I have.
Not yet, doctor.
Yeah. All right. It is on from my side. I don't know. Can you now see?
It's okay.
I think. All right. All right.
Okay.
So I would focus on 4 points in my presentation. First of all, I would discuss about what is the footprint of in Pakistan in terms of number of cases and deaths, and then I would discuss briefly about what is the state of economy of Pakistan during this COVID-19 crisis, and then I would discuss briefly about what is the footprint of Islamic finance in Pakistan in different segments, and how COVID-19 has affected Islamic finance in Pakistan, and what are the different opportunities and challenges that this crisis present to the Islamic finance industry in Pakistan. So coming to the first point, which is the spread of COVID-19 in Pakistan, just as of today, we have got this information that now the number of cases have gone up to 50,000 in Pakistan, and there have been more than 1,000 deaths related to COVID-19 in Pakistan. So initially the spread was a little slow, but then now we are seeing that the spread is increasing, and now we are seeing the peak of this spread of coronavirus in Pakistan. Government has taken lots of measures. There has been economic stimulus package. There has been IMF as well, from countries and from international financial institutions. And then there are also efforts on the social sector side to mobilize funds to in the philanthropic sector. Now, coming to the economy of Pakistan, this COVID-19 is affecting a lot of macroeconomic indicators. It is expected that the GDP growth rate might go down to 17% in Pakistan, and we're also seeing that the tax revenues would also fall by a great margin. The government was taking efforts to increase the tax net. Now, due to the decreased also for the problem, but there is also a silver lining as well, that the imports of oil are now down, both in terms of volume and also because of the decreased oil prices. The import bill is now going down. So payment that the remittances who were abroad, and now when they get laid off or they do not find employment overseas, and when they come back to Pakistan, so the remittances are also suffering, as well as the exports and foreign direct investment. A big crisis in Pakistan that we are facing. Now, coming to the Islamic finance industry in Pakistan, to the Islamic banks. Islamic banks have 15% market share in the overall banking industry of Pakistan. There are 5 full-fledged Islamic banks in Pakistan, and around 17 conventional banks also have Islamic banking operations. The total branch network of Islamic banking is now more than 3,000 branches. But Islamic banks are facing mostly focus on asset financing. And what happens in such economic crisis is that people don't look for expansion of production facilities or expansion of their businesses. They are looking for distress financing. But the problem with that financing is that when you but there are other product alternatives that have been developed in equity financing, so we are seeing a shift from asset-backed financing to equity financing, and also to trade-based financing, where the funds can be utilized more flexibly as compared to other modes like murabaha and so on. There is also not reprice loan the financing, because once the price is agreed, then there cannot be increase in price just because of late payment. So over here, Islamic banks are facing problem that if they have non-performing loans, if they don't get payment on time, they would not get any extra increase like the conventional banks get. Total financing ratio in Islamic banking is very low, but in this indicator, Islamic banks are now going to face more challenges. Why? Because the economic crisis is there, and it is quite possible that not all the financing clients would be able to fulfill their commitments. So the non-performing loans might go up, and then Islamic banks have to have some product alternatives which they can use to restructure the contracts so that they are not affected and the depositors do not get hurt because of this. If we look at other segments in Islamic finance, like the Islamic, they are also facing problems. Avoided because of diversification. So diversification won't be suitable. Why? Because all of the companies are facing the same crisis. So it's a systematic risk. So over here we are seeing problems. Islamic mutual funds, especially the equity funds, are struggling. But there is also an opportunity that new sukuk have been issued, and relatively the interest rate in Pakistan as compared to other countries is usually higher, even higher as of now as well. So the Islamic income funds and the sovereign funds and the cash funds who
Hello?
not hurt by that much. If you look at the sector also depends on Islamic banking for its growth. So when Islamic banks give financing in terms of financing car or financing home or financing equipment, then the company had their business. But if Islamic banks are not able to provide financing as much as they used to be able to, then the Takaful sector is also not getting enough business from the banking sector. If you look at the Sukuk sector, in Pakistan we have sovereign Sukuk, and we also have corporate Sukuk. In sovereign Sukuk, usually the Ijara mode and the Istisna mode is used. This sector is also very important, but in Pakistan, because of economic instability, the long-term instruments in the capital markets are not there.
Dr. Salman?
And because of this, I'm yes.
Excuse me, doctor?
Yes. May I?
Still a long way to go because
Yes.
we have very limited time here.
You want to say it? All right. So let me just summarize the next minute. So if you look at the Islamic capital markets, in Islamic capital markets, we see that the main Islamic index has gone by 1/3 of its value in the last 4 months. So Islamic banks as well as other institutions like it. So this is a problematic time, but there are opportunities as well. I would just list down those opportunities in a minute. So in digital banking, we see that Islamic banking have a huge room to play their, because now the fintech is on and doing banking on Mohammad very award went to Islamic Bank in the last year. So Islamic banks are good in terms of providing service quality and in embedding technology in their financial service provision. So use of digital banking, use of fintech, use of social finance, like Salam and announced a construction package for the industry, and over here Islamic banks can have more business coming in terms of diminishing musharaka or istisna based products which are related to construction or manufacturing. And then the opportunity rate was 5% just 2 months back, but now they have been decreased in 3 phases to just 8%. So now there is a decrease of 4.25% interest rate, which would help the Islamic finance industry and also the manufacturing sector to get financing at a relatively lower cost as compared to before. And there are also other measures like wage financing offered at a very subsidized rate of 3%. And there are also other products or measures which enhance the capacity of borrowers to finance themselves, like increase in the debt burden ratio and also increase in the maturity of the ongoing financing products. So those who had to
Doctor?
pay they are given this provision that they can pay once. So this will also allow the NPS, RBDs, NSCs not to tell repricing option is available in some structures, but not in others like in Murabaha. And trade financing would also face issues getting much less business these days because of decrease in port operations and also because of decrease in the
Right. Dr. Salman, I'm sorry. Time is up. Can I stop you here? Since your voice is not clear.
Yes. I have already finished. All right.
All right.
I have already finished my presentation.
All right. Thank you very much, Dr. Salman. Now we proceed to Saudi Arabia. Dr. Falil, are you still there? Dr. Falil? Well, let's proceed to next country, Turkey. Dr. Saban, you ready? Please, time is yours.
Hello, I'm here. Assalamu alaikum wa rahmatullahi wa barakatuh. I will summarize what we have written in our book chapter into 3 parts. In the first part, I will summarize the ongoing situation in Turkey since we observed the first case of COVID-19 outbreak, which is taken place on March 11, 2020. And then I will explain the responses of government and NGO organization response to COVID-19 outbreak. And lastly, I will explain what will be next after this outbreak in all over the world. Before starting, I need to underline the fact that the general contribution of Islamic economics or Islamic finance in Turkey is around 5.5% in all the economy. We have 7 banks in our banking system. We call participation banks. In other words, Islamic banks. We have more than 40 banks in Turkey. So simply speaking, we have more conventional-based liberal system, but also we have well-effective Islamic finance. So let me first explain the ongoing situation. First of all, we should figure out that this type of crisis is not only a supply side or demand side shocks. This COVID-19 outbreak contains both supply and demand side reasons. So this is very important features of such crisis, because historically when we observe such crisis, we would have either supply side shocks or demand side shocks. But now we have a very, very unique case. So as a result of such a crisis, the first negative impact is on employment in the service industry. Due to the lockdown measures that have closed commercial interest, including tourism sites, entertainment venues, and shopping malls. Other disruptions will also manifest themselves on macroeconomic indicators, such as growth, interest rates, inflation, and public finance. In Turkey, administrative, legal, political measures have been taken to mitigate the impact of the crisis, with economic stability packages at the top of the list. And we have several details. I will skip this part. Well, the most important fact about COVID-19 in Turkey is that our financial markets respond this outbreak after 20-day delay. That means when we see the first case in China, our financial markets is still uprising. So whenever we see the case in Turkey, our financial markets respond these shocks And in that case, we already spent 20 days. So what does this mean? This means that the financial markets in Turkey responded seriously to the epidemic in the short term. In addition, we expect the markets to fluctuate and remain unstable in the short term following the course of the COVID-19 outbreaks. So in our case, we have a short time that our market go down, and then after almost 2 months later, which means at the moment our market fluctuate in a stable pattern. So in case of, on the side of Islamic finance, on the other hand, although we have a limited data to analyze during these processes, we observed that the pattern of Islamic banks shows the similar trend with compared with the overall index, market indexes. So we see no big differences between Islamic finance and conventional finance instrument in Turkey. However, this is quite limited explanation. So let me briefly explain, because we have very limited time. Briefly explain what kind of responses governments showed in Turkey. We have a couple of packages. Well, approximately $16 billion aid package announced by the government, and there are different aid packages as well, such as delayed taxes and so on and so forth. Well, I just come to the real impact of these COVID-19 outbreaks on Turkish economy. Well, the solid impacts is thus Turkish lira depreciated about 15% against euro and against US dollar. Similarly, gold price also increased by 15% during these processes. Well, the only good news about Turkish economy about this COVID-19 outbreak is that, as you know, there is a sharp decrease, around 60% decline in oil prices. Why this is a good news for Turkish economy? It is because Turkey is a net importer of energy. Well, I just come to the end. What will be next as a recommendation? Well, first of all, there is a very important question remain on the table. When these crises be under control? Well, there are two suggestions here. The first one is the 3-month period. Why 3-month period? Because in China and South Korea, they spent 3 months to control this crisis. However, this answer is not reasonable for European countries, for USA, and for Turkey. Our suggestion is the right time might be the end of this year. In order to control the impact of the crisis. Well, what is the real impact on the overall Turkish economy? According to our simulation analysis, we calculated that around 46% shrinkage will be observed. Well, what does this mean? This corresponds to around $200 billion depreciation. Well, as a result of help packages in Turkey, according to our simulation analysis, we showed that 50% of this decline will be covered. Which means according to our analysis, the recession in all the markets is about 17% in Turkey. But due to the help packages, this 17% could be divided by 2. So, which means around 8.5% decrease could be observed in GDP. Similarly, on the side of unemployment, we observed that there might be 28% unemployment rate in Turkey. And you can also divide this 28% by 2, which is correspond to 14% unemployment rate would be observed by the end of the year. Again, according to our analysis, we need around $100 billion help packages by the end of this year. We already spent around $50 billion. So that means we need to find around $50 billion foreign help in the next 6 or 7 months. So in that case, for Turkish government or central banks, there are a couple of instruments. So we introduced 2 instruments. The one is the Euro-TIA swap channel agreement with the Central Bank of European Union, and the last one, which is quite relevant in Islamic finance, we suggest that epidemic sukuk instrument could be introduced. Epidemic sukuk. So by introducing such instrument, government could raise financing for this outbreak crisis. So,
excuse me, Doctor.
Yeah. This is my last sentence, and at the end I can also join the discussion. We hope humanity will find a way to overcome these and similar outbreaks. Assalamu alaikum.
Walaikum salam. Thank you, Dr. Saban. Now we have UAE, presented by Blake. You're here, Mr. Blake?
Yeah, can I share a couple slides?
Take your time, please. Time is yours. 5 minutes presentation, sir.
Yeah, can you see it?
Yeah.
Okay.
Not yet. Yeah.
Okay. So yes, we wrote our chapter on the UAE and the response and how COVID has impacted Islamic finance in the UAE. Just to give some perspective, after an increase in cases, there was some flattening of new cases, but recently that's gone in the other direction, and now there's another increase in cases. So we're still sort of in early days in the UAE, as in many other countries right now. The response to the shock has come largely through the central bank that's issued about 250 billion dirham in support in various forms. The primary form is through a zero-cost funding support facility to all the banks, conventional and Islamic, and that allows them to relieve a little bit of the liquidity pressure that the crisis has created. They're also able to use their capital conservation buffer, particularly for the systemically important banks. They're allowed to use 100% of their capital conservation buffer that's been built up. The other banks are allowed to use 60%. And the major customer-facing part of the relief package is that all of these central bank facilities require that banks offer their customer a full payment pause for 6 months initially in mid-March. That's been since extended through the year-end 2020, and that's the targeted economic support scheme. In April, after another increase in cases and extension of the full lockdown, the central bank extended the relief packages to increase some of the liquidity support through easing the reserve requirement for demand deposits by half, and also allowing banks to draw down their liquidity facilities and their liquidity coverage ratios allowed to fall to 70%, and the domestic liquidity eligible liquid asset ratio is allowed to fall to 7%. So that really addressed the two sides of this, of companies that were facing a need for cash and a lower revenue than projected, were drawing on their facilities with banks at the same time as customers and depositors were looking to rely on their deposits to get through the hardship, particularly people who had lost their jobs or had been otherwise economically impacted. The Central Bank of the UAE, as well as the two financial center regulatory authorities, provided joint guidance on IFRS 9 to ease again some of the capital adequacy impact of the economic shock, basically delaying some of the forecasts on the macroeconomic impact, which would have significantly increased the expected losses that they have to otherwise realize. So the big thing with the relief packages is that they're largely defensive. They provide a pause for businesses that addresses the immediate impact of the lockdown, particularly for businesses that remained closed and have no revenue to make payments on the financing that they have. As the crisis continues, the damage from the lockdown will grow, and not all businesses will be able to survive with just payment delay. So there's going to be other needs for the banks to address in order to manage their own capital position, as well as manage help their customers through this. One of the specific challenges with the lockdown that's been a little bit eased during Ramadan is that all Islamic banks are having to rely more on digital technology. The standalone Islamic banks, compared to the Islamic windows, tend to be in a little bit behind in terms of not having a larger bank to rely on for the digital technology. So standalone Islamic banks will have to be really aggressive in terms of trying to stay at par with the Islamic windows in terms of technology as this goes on. Looking forward, the Islamic banks perhaps have a greater responsibility from their customers' perspective because it's based on stronger ethical principles than conventional banks that are value neutral. The Islamic banks have ethical principles that should guide their industry, and that increases the customer expectation for them to take efforts to provide relief and support rebuilding following the crisis. They also have significantly higher level of exposure to the private sector versus government and government-related enterprises compared to conventional banks, which increases their need to evaluate the resiliency of their customers, particularly as the lockdown and the impacts of COVID continue. And one of the things that is particularly notable with this crisis is that environmental, social, and governance, ESG issues, particularly social issues, are pivotal in how well businesses are able to respond, and that affects banks. And so to the degree that they're able to re-engage employees and customers or lose them to competitors, depending on how they manage their own ESG risks, will have an impact on the banks. And particularly where the banks are limited in their ability to use backward-looking financial data, which may not be as relevant post-lockdown, post-COVID. The ESG, the ability of businesses to address ESG issues either well or poorly can help to guide them on evaluating which customers are more or less risky as they're looking to which ones they want to prioritize in support for rebuilding post-COVID. And that's the end of my presentation.
Indra?
Yes, sir.
Continue to question.
Assalamualaikum.
Waalaikumsalam. Oh, Dr. Aliu, you are here there? Dr. Aliu?
Yeah, can you hear me?
For a quick
Can you,
point, sir, for Nigeria,
can,
because we did, yeah.
can you hear me now?
Yeah.
Okay, thank you very much. Let me give a wasiya before I continue. In case of any failure, I learned my co-author is already in the room, and also Prof. Kabir Hassan. So either way, any one of them, inshallah, can continue. But inshallah, I think it is now okay. I have technical problem. Like I mentioned, Nigeria is a member of OIC country with over 200 million people, at least 55% Muslims. We recorded the first case in February 27th, and then this led to closure of borders, closure of schools, ministries, and all things partial and total lockdown, and that has affected the economy severely. And of course, the government called people to seek for the medical advices, social distancing, washing hands, and other medical advices. The health sector was definitely, because this is unprepared, it came very unprepared, like in many other countries, the health sector is being overstretched. Currently, the existing illness and COVID-19 compound the matter. But then the government come up with several measures to contain the situation. Now, like I mentioned, at 1st May, we had total cases of 2,170 with 68 deaths. That's when we submitted the chapter. But as I'm talking today, yesterday, it was reported that we had about 7,011 cases in the country, almost quadruple. So that is just in 2 weeks' time. And with over 200 cases. Well, that is relatively, I don't want to say okay, but proportionately compared to other countries, Nigeria was having effect in terms of the number of cases reported. Now, then the government immediately, when the cases started, the government supported the epicenter of the disease, the Lagos state, which has with about 10 billion naira, and also empower the Nigerian Center for Disease Control with additional 5 billion naira so as to prepare for the equipment, ventilators, other facilities. Now, on the economic side, knowing fully the consequences of the business closure for a long time, because this is an external shock, which comes unlike the 2007-2008 financial crisis, which is indigenously initiated, but this one come from external factors. So the government started to bring measures so as to arrest the situation. Now, in total, the central bank come up with stimulus package to the tune of 3.5 billion naira to support the micro, small, and medium enterprises, and also to support the health sector with production of health facilities in the country. Also, the central bank give 6 to 1 year moratorium for repayment. It reduced the interest rate from we know Nigeria is a lower middle income country, according to the World Bank, with the 90% of its foreign exchange earnings coming from oil sector. So oil revenue is, really one of the major sources of government revenue. The per barrel as 2057. Yes. Can you hear me?
Yeah.
Is it okay? Okay. So but then the price of oil shrunk to less than $30. Then the government has to revise. And now coming to Islam finance sector, we have positive, we have negative effects in summary. And then I have a recommendation to make quickly. The shock effect is in the Islamic bank, it affects the business operation. By implication, its profitability as planned cannot come because of the lockdown. There is only skeletal services provided. It also causes liquidity problem as the excess funds which the bank cannot invest in the government treasury since it's interest-based, unlike conventional bank, which has this advantage. It also affects the repayment of loans as retailers, like Prof. Kabir Hassan was mentioning. This is a measure to assess the Islamic banks, whether they can really follow the Islamic teachings or not. So there is certainly defaulting, in terms of repayment. There is also some stimuli packages by the CBN which does not suit the Islamic banks, thus is securely implemented. There is indefinite suspension of issuing of sovereign sukuk. That was when the crisis hit Nigeria. But alhamdulillah, I think this week, the government come up with the third sovereign sukuk to be issued was 150 billion naira. The COVID-19 negates the effort of the Islamic capital market sector in Nigeria in terms of product and services, and the quest to increase financial inclusion and total market share of 25% by 2025. Currently, the sector of Islamic finance is very insignificant. So now the government, through the Securities and Exchange Commission, plan to increase it to 25% by 2025. The palliative measures put by the government to support the people during the lockdown are grossly inadequate, actually, because Nigeria is very largest country with large population and high level of poverty. The role of non-bank financial institutions such as Islamic cooperatives, Zakat, Waqf, Sadaqah, are evidently enormous in this situation, but it has fairly weak regulatory framework that need to be strengthened. Now, quickly on the positive side, the financing of SMEs is hardly made by the conventional bank. So Islamic banks started recently with the Jaiz Bank. They come with a department for financing micro and small and medium enterprises, and they're applying Mudaraba product. This is very good because in just 8 months, they disbursed 4 billion naira in 8 months' time. So just before the crisis. So this, I think it can take advantage to continue with this so that to go to the post-normal or new normal, as they say. The over 100 million Muslims represent huge demand for Islamic bank in Nigeria, especially post-COVID-19 due to increasing averse to prohibited interest. Like Prof. Kabir Hassan again, mentioned, and also Dr. Ahmad Abdurrahman from Brunei, that this interest rate is one of the major problems, one of the causes of this pandemic. So we need to go back to the teachings of Islam and follow it so as to see blessing in our daily life. There is potential growth for takaful, especially in the health sector. You can see how vulnerable we are. Basically, even the developed countries, how vulnerable we are all as humans. So post-COVID-19, definitely there will be more attention on the real sector, on the essential services. You can see now all the entertainment industry are shut down and still life continue. So which means we can do without some of these things which we are wasting our money on. Most of the crisis is an opportunity to diversify the long overdue monocultural economy of Nigeria, as stated by the CBN. The intervention by the central bank of 3.5 billion naira, actually, they say they want to take advantage of this COVID-19 to turn around the Nigeria's economy. This is very good development. If this happens, I think we will all be happy, and I think this is one of the positive side of the COVID-19 effect. Now, quickly, the recommendation I have before my time runs out. Can you give me 1 minute?
Because our time is very limited. Okay,
thank you. The federal government should collaborate with reputable financial institutions and grassroots organizations to distribute palliatives to people, especially at lower level, because of a lack of data. So you don't know who to reach out actually quickly and in this situation of emergency. The CBN should appreciate the sizable number of Muslims and provide adequate facilities to serve their needs and deepen the financial sector in the country. The financial exclusion is high among the Muslims. So if the CBN is really interested in reducing the exclusion, so provide products and services that suit the Muslim. The CBN also should evaluate its intervention to ensure that out of 25 or 6 interventions, there are options for Islamic finance. And then quickly, regulators should in the capital market should further resume engagement with federal government. Okay, that has been done, like I mentioned. The book has been about to be issued. The legislature should come up with an act for Islamic Bank, a comprehensive one, so as to really, sustain.
Okay. We miss Dr. Aliyu's voice. Dr. Aliyu, my apology. I think we have to proceed to the next session since we cannot hear your voice anymore.
And it became that it can double.
Keep going on.
Okay, I think it's time to proceed with the question and answer.
Thank you very much, Dr. Aliyu, for your presentation. Well, to the respective speakers, I think we only have one question here, and it's up to you. You want to share your thoughts on or not about this question? So the question is actually about is Islamic banking in your country can rely on asset liability management, specifically to share a restricted investment account as part of important thing to tackle the impacts of COVID-19 on Islamic finance industry. So is it clear enough for you, for all speakers? Anyone who want to answer that question, since our time is very limited?
Yeah, it is regarding Islamic banking, asset liability management.
It's Dr. Maybe from Brunei Darussalam, Dr. Abdurrahman, you want to answer that? About Syria? Hello? Or another country? Maybe want to share?
Yeah.
Because what's going on, Dr. Abdurrahman first. Now I can hear you. Oh, sorry, Dr. Iman. Dr. Iman, please, from Oman.
Yeah, all right. Thank you very much for the question. Since it is regarding to the asset liability management during the COVID outbreak, I think this is the right time for the Islamic banking industry to implement the proper PSA account, although it is quite in challenges because the public itself, they are more, aware about the conventional banking practices. So in order to, shift from the, conventional mindset perspective, in order to change to Islamic perspective, is not easy. Yes, it is profit sharing investment account. It is quite, unique for Islamic banking industry compared to the conventional. But this method is not easy to implement because the bank itself as an intermediary, sector. So they have to manage from the asset and liability. If they are only focusing on the asset side, the liability side is not matched. So it become a mismatch problem to the financial statement of the Islamic banking itself. And that's why if we want to implement the proper profit investment sharing account, so we have to educate first the people, the public, in order to understand what is the implication if they are putting the Mudorba investment account, for example, or Wakala investment account to the from the liability side. Because during the outbreak, of course, we are facing a lot of issues and challenges that faced by many Islamic banking entities in terms of rescheduling, in terms of restructuring, in terms of the postponement of payment from 3 to 6 months. So this give a big implication to the Islamic financial sector. So that's why if we are facing into this kind of losses, for example, from the asset side, it will affect the liability side of the Islamic bank. So that's why if on this side we are implementing purely, for example, Wakala point of view, because there will be an Sharia audit for this kind of outbreak. So let's say, for example, the portfolio of the corporate sector, made loss, for example, 3% of the total portfolio, right? So on the liability side, we have to inform the customers, investment and investment account customers, that we are made a loss on in this kind of portfolio. In this case, you cannot receive the profit as per the expected, or maybe profit as per the projected if it is of Mudoroba investment account holders. So if we are matched between this side to liability side and asset side, if there is loss, the customer shall bear the loss. I think that there are one country try to implement, but still yet implement, because it's not easy, because the bank itself is intermediary. They have to manage the liability and the asset side. If they are unable to match between the asset and liability, the sum'ah of the bank, we call it what is the sum'ah in English? The confidence of the customer to that particular bank will be decreased, and so this will create some kind of rush or a bank run. So this we want to avoid as soon as possible, so that the confidence of the customer will still be there. I think that's my answer. Thank you very much.
Thank you, Dr. Iman. I see Professor Kabir Hassan, you raise your hand, please.
Yeah, actually, now is first of all, there will be all the criticism about this banking model that we practice in Islamic banking. Aside from this issue, we have this smoothing technique from the accounting standpoint. There is a profit equalization reserve and the investment risk reserve. So it's the high time use this account in order to help the investors, those who take financing from the Islamic bank, and the profit equalization reserve that just smoothing out the return to the stockholder. They also need to use this fund in order to take care of their employees within the bank. Aside from this thing, that Islamic bank also has this doubtful income that should be also used to the consumer. I mean, those who are within the periphery of the Islamic banking operation. Now, right now, also many Islamic banks also have the zakat account. They collect this. They should also use the zakat account. Those people, not willful or defaulter, those are really facing real business disruption because they have a debt, and the zakat can be used to relieve them of their debt obligation as well. So given the limitation that we have, the structure and within the regulation, we can easily implement these things right away in order to relieve the investors, I mean those who take funding from the Islamic bank, also the Islamic bank employees, because they don't have business. Now the shareholders have to use this fund in order to help them. Also the community from their doubtful income, to use this doubtful income to the community, the people, I mean those who are around the Islamic bank, because you operate not in a vacuum, you operate within the community, and you're trying to empower that community as well.
Right.
Thank you.
Thank you for the insightful answer, Professor. Any other speaker wants to add, or it's just we'll stop here from this discussion because it's already 3:30 p.m. now, more than 3:30 p.m. Okay, thank you very much for all the speakers for the insightful materials you've been presented before. And now we are going to the closing remarks from our editor, Dr. Mohammad Omar Farooq. I see you're still there. And please, if you don't mind, after your closing remarks, maybe you can show us how to download the book of this book at the end of the session.
How to download will be done by Mr. Rafiuddin. How to download will be done by Mr. Rafiuddin.
Okay.
Okay, Dr. Mohammad Omar Farooq, time is yours.
Can you hear me?
Yeah.
Okay. All right. Well, the respected publisher, the sponsors, respected co-editors, co-contributors, and also the guest participants today. Assalamu alaikum wa rahmatullah. We heard about different countries in the context of COVID-19, and it was quite insightful, and I'm sure that the readers, when they read the book, they will find it quite informative and insightful as well. My brief comments are not going to focus on any particular country, but I rather want to make some general observations that hopefully would provide some food for thought for further discourse on this, because we're at a very early stage of this crisis, and also a very different type of crisis than what we have experienced in the past. Before anything else, let me underscore the point that while we are dealing with the new crisis, we should not be forgetting that we had a crisis in 2008, and the way we dealt with that crisis, much of it was superficial. Much of it was on a very shaky ground, focusing on the things that actually are only cosmetic kind of things to linger the underlying problems and actually getting to the root of these. So my first point is that even though as bad as it is due to this crisis, things were not really very rosy even before this coronavirus crisis. We need to recall that the major powers before this crisis, they have been basically engaged in the pursuit of how to become more powerful on two particular fronts. And those are the economic and military, as if that those are the things that really matter in terms of power plays. The existential threat of environmental challenges, well, those were inadequately prioritized. The poverty and deprivation around the world, they continue to grow unchecked. The great powers, they use their military prowess to engage in or engineer conflicts that not only devastate some nations, but also contribute to unprecedented level of refugee problems, as we have seen. We have also seen that in the name of fighting terrorism and external threats, already extreme level of military spending by major nations continue to grow, as if there is no better way to seek peace, security, prosperity, and stability except through amassing military capabilities. And the global conglomerates of the weapons industry continue to thrive. And even during this crisis, we will see that how they are impacted. But the point here is that basically in this context of the world where war, conflict, greed, corruption, poverty and deprivation, pollution and environmental degradation that were rampant. Now, who could have thought that a few months ago, an invisible virus, we don't even know what is its source, would bring the world to its knees? As the Economist magazine's cover page put it, that the world is closed. Now, we will discuss about those impacts throughout the next few years as things unfold. But the reality is that a tiny, invisible adversary rendered all the most powerful and destructive weapons useless. We could not even take care of the frontline service people who needed protection because we were focused on the wrong kind of things. The reason I say this is because most of the time, the Islamic finance industry is not the leader in thinking, but rather they take cue from what is happening in the global context and in the West. And that's where what is important to understand is that I would like us to think that we need to refocus, because it provides us with a very important opening to make Islamic finance more relevant. And when I say relevant, most of the time we discuss the performance or the industry as that, well, are we doing better or worse in our ROE or returns? Is our asset level growing? And are the numbers of countries having more Islamic finance? Those kind of things. But actually, we need to have a better value proposition. And that value proposition should reflect that we are already experiencing a peak of about 25% of our banking population that take interest in Islamic finance. What about the rest of them? We need to take into consideration that many of them still do not have confidence in the value proposition of Islamic finance. It is important that not everything is on the shoulder of Islamic finance, but we all need to work together from policy perspective, from governance side, from the Islamic finance industry and all others, that we need to make sure that Islamic finance is properly interfaced with the kind of parameters that meet the aspirations of common people. Right now, most of the common people, they are bypassed by what we call Islamic finance. Unless we can make impact on reducing poverty and inequality, unless we can make sure that people do not hungry in the world, regardless of whether it is in a Muslim majority country or elsewhere, if we are not able to find ways to deal with the real challenges that most people face, then Islamic finance will continue to grow. We will be benchmarking our performance with the conventional counterparts, but vast majority of people still would be bypassed by Islamic finance. We are already experiencing that there are challenges in regard to environment, there are challenges in regard to war and famine, there is challenges regarding the issues of war and refugees, but also it is important to understand that all these things need to make us somehow change our thinking, change our way of dealing with our life and coming together, that we are all in the same boat. Not simply put a hole in the boat and expect that the world is going to be fine. Islamic finance, the way it has come a long way from where it started, we still have a long way to go. But most important part that I want to emphasize is that in the context of this COVID-19, we need to start a discourse that how Islamic finance is not just for Muslims, but actually it is humanity oriented. It has a value proposition for the entire humanity, and also it can help interface with the real challenges so that the poverty, the inequality, the concentration of wealth, and all others that go with the finance industry in general or banking industry in particular, it is important that our discourse should be focusing on that. So we learned about a lot of countries, their experiences, how they are coping with it, how they are going to deal with the long-term challenges. But I hope all of us who care about the society, the economy, and in particular those of us who are associated with Islamic finance, this book is nothing more than just a starting point. It is too early to assess the ramifications of this crisis, but hopefully we can engage ourselves into an elevated level of discourse that how we can make Islamic finance more relevant to the real challenges that most people face. I hope that that's the footnote we can have, and inshallah we can continue from there. I would like to thank everyone who have participated in this book launch, and hopefully we will see the book shortly, and I'm sure that now we are going to be told how it is going to be downloaded, and I am very excited to see that.
Thank you, sir. Thank you, sir.
Thank you very much, Omar. Thank you.
Thank you very much, Dr. Mohammad Farooq. Now, can Mr. Rafiuddin Shikhoh, are you still there? Can you please share us how to download the book in Salam Gateway website?
Sure. Bismillah ar-Rahman ar-Rahim. Once again, Assalamu alaikum wa rahmatullahi wa barakatuh, everyone. So it's my honor to share how your hard work that has come together can be shared. And later on, perhaps the moderator and can discuss how we will be further promoting. But if I can share my screen and let me know if you're able to see the screen.
Yeah. Not yet.
Not yet. Still
Not yet.
Still loading.
Please let me know once it's visible.
Yeah, we can see it.
Okay. So once again, we're honored to be contributing in a small way to this very important work. It's an incredible collection of insights. And on behalf of Salam Gateway, who will be putting a lot of effort in promoting the book and hosting the book, besides which you will be able to download first of all, you'll be able to download the book from KNEKS's website. But in addition to that, you could go straight to salamgateway.com, which it's available right now. for download. So you go to salamgateway.com, which, as many of you know, is a news and media site that covers the wider Islamic economy sectors of halal industry, Islamic finance, and lifestyle. So you would be able to go there, and either on the front page, there's a link to the book, or if it's difficult, you could go to the market report section, and right there, the very first item is the book. You could go to the page and click on the download link. You may be asked to, you will be asked to, if you're not already registered, you'll be asked to register. It's a free, you just have to give your email, and we'll be able to keep you posted on the articles and news related to Islamic finance, obviously, and the wider Islamic economy. But basically from this page, you're able to download the report. And in the name of Allah, Bismillah ar-Rahman ar-Rahim, perhaps the first preview or first view of the report to all of the participants. This is the book that I have opened up. And we would request that the book be accessed through Salam Gateway and not uploaded separately, but would request that it's linked to this page, again, so that we're able to promote it effectively through this platform. Coming back to the book, you can see, I'll start, so we start with the infographic or the visual summary, the preface, and then the content, table of content, which I'll stop here, which summarizes all of the, obviously the chapters. So, and subsequently, just to kind of show you, a little bit of a flavor of the book. So to conclude, again, you can go to salamgateway.com and be able to download the book from there.
Thank you very much. Thank you.
Right. Thank you. Thank you, Rafiuddin Shikhoh. Right, ladies and gentlemen, now we've arrived at the end of this event. Actually, thank you very much for staying with us till the end of the session. And alhamdulillah, it was a very fruitful discussion, discussing about the different challenges and opportunities in OIC member countries in terms of impacts of the COVID-19 itself. So, for the respected speakers, if you don't mind, please turn on your video. We will take picture first for our documentation of this book launch event.
Please turn on your video. This is how we take pictures nowadays.
Right. In my screen, Dr. Mohammad Farooq still not opening his video, please.
My video is not opening? Yes.
Still, okay. Oh, okay.
No, we can see you, Omar Farooq.
Iman, Dr. Iman, you should turn on your
Yes.
video.
Thank you very much.
Your video.
Okay,
We can't see you. Yeah.
Okay. 1, 2, 3. Okay. Maybe we will take more times. 1, 2. Right. One more. Right. 1, 2, 3. All right. Yeah, we're coming to already to picture. Right. I think enough. Some speakers still didn't turn on the camera. Yeah.
May
You want
I
to
make a announcement, please?
Oh yeah, please.
Emir?
Please.
Yeah. I am. There is a special issue of COVID-19 in Islamic finance at the International Journal of Islamic and Middle Eastern Finance and Management. So I want you to submit your academic paper there through the online system. There's also another special issue for Eurasian Economic Review. This is ESI, these are both are SSCI index journal. And also I am editing 2 books on COVID-19 Islamic finance, different angles of it. And it will be published by Emerald and Taylor and Francis. So many of you have submitted your proposal, and if you still did not, please submit your proposal because we are in the negotiation phase with the publisher. So I just want to let you know this, okay? Thank you.
Thank you, Professor. Thank you very much, Professor.
Thank you, Professor, for the information.
One short note. Why the book is exclusively put on Salam? Control. We want to know how many people are downloading and who are downloading, so we will get the data. So please share the Salam Gateway link, and later on it will be also linked to KNEKS website. But from KNEKS website, it will be brought to the Salam Gateway website as well. So just short note. Yeah, Chitra, come back to you again.
Yeah, all right, sir. Well, ladies and gentlemen, once more, thank you very much for all the speakers, Mr. Ventje, Mr. Rafiuddin, prominent editors and speakers, and all participants. Thank you very much for staying here and seeing our discussion and see the book launch of COVID-19, the impact of COVID-19 on the Islamic finance industry in the OIC countries. So, well, everyone, stay safe and take care. Hopefully, this pandemic will reach an end anytime soon. I apologize for any inconvenience during this event. Thank you, and let me close it. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, everyone. Thank you, Bora.
Thank you.